tiers of government share 680 billion naira at monthly Federation Account Allocation Committee meeting. Federal government calls for deeper transparency and accountability by subnationals in public finance management. Central Bank of Nigeria restricts forex for wheat importation to boost local production. Plus, President Joe Biden plans more tax for the rich. This is Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Federation Accounts Allocation Committee (FAC) has shared 680.687 billion naira to the federal, states and local governments as revenue accrued in the month of March 2021. At the end of its meeting in Abuja on Thursday, the committee disclosed that this amount included 13% derivation and cost of collection, transfers and refunds. It also noted that there was a significant increase in revenue generated in the course of the month as at 22nd April 2021. Excess crude account stands at $72.4 million. Stabilization account is 23.3 billion naira, while natural resources development account is 77.7 billion naira. The federal government has urged states in the country to deepen fiscal transparency and accountability in the public financial management system to improve good fiscal governance at the subnational level. Permanent Secretary, Ministry of Finance, Budget and National Planning, Aliu Ahmed, who doubles as the chairman of the committee, explained that the program aims to instill a common set of fiscal behavior and standards in the states and encourage widespread adoption of good practices in fiscal and public financial management across the states, while respecting their fiscal autonomy, strengthen fiscal transparency by improving overall budget transparency and accountability to help build trust in government. In her contribution, the Secretary, Joint Tax Board, Aisha Obomegi, advised states to take bold and courageous steps in automating their internally generated revenue collection systems. She disclosed that at the moment, only the Federal Inland Revenue Service and 17 states out of the 36 states of the Federation have fully automated their IGR. The recently published report on internally generated revenue by the National Bureau of Statistics showed that 1.31 trillion naira was generated by the 36 states and the FCT in 2020. This is lower than the 1.33 trillion naira generated in the previous year. In the fourth quarter alone, it stood at 335.3 billion naira generated the previous quarter. The data showed that 14 states and the FCT recorded quarter-on-quarter growth in IGR during the period under review. Lagos emerged again as the leading state, accounting for 31.8% of total IGR in 20. Moving on. The federal government says it will continue to put the right policies in place towards attaining a sustainable economic recovery. Minister of State, Budget and National Planning, Clement Agba, made the commitment at the quarterly meeting of the Open Government Partnership National Steering Committee in Abuja. Neka Oko reports.
Prior to the COVID-19 outbreak, the economy was forecast to grow by 2.1% in 2020 and rising to 3.3% in 2021. But that was not to be as the global economy crashed and the nation's economy entered a recession in 2020. This set back 3 years of recovery fueled by a fall in crude oil prices due to weak demand. 2.3 trillion naira stimulus was injected into the economy last year to battle the health and economic consequences of the pandemic. Minister of State, Budget and National Planning Clement Abba is hopeful that with government's economic sustainability plan, the economy will come out stronger than expected.
Good enough in the fourth quarter, we had a positive GDP growth, even though it was low 0.11%, but it effectively took us out of a recession. And we do believe that as we continue to implement those economic sustainability plan and inject more money into the economy, that our GDP growth will continue to be on the positive side.
The minister also debunked a claim by a civil society organization that Nigeria received a donation of $5.6 billion to fight COVID-19 pandemic. The Open Government Partnership OGP National Steering Committee is meeting to discuss the progress made in the implementation of its commitment as well as OGP principles. In Abuja, Nneka Oku.
Okay, moving on. The federal government has never shied away from the fact that Nigeria has a revenue challenge, but perhaps the much-needed change lies with the sub-nationals that have much dependence on the Federation account. This is our focus today, and I am being joined virtually by Paul Alaje of SPM Professionals. Mr. Paul, you're welcome to Business Express.
Thank you so very much for having me, and good afternoon.
Good afternoon. Well, Mr. Paul, just yesterday, the Federation Account Allocation Committee shared slightly above 680 billion naira, 30 billion above the amount shared in recent months. But a good number of states are not generating revenue. What are the factors at play here?
For me, the major factor, there are a number of factors that are at play. Some states have not identified means of revenue generation. And I can tell you, in Nigeria of today, there is no state that should do less than 2 billion naira a month, based on available window that is ubiquitous to all states in Nigeria today. Unfortunately, the quick fixes and the low-hanging fruit is what most states have been used to, and they have not even identified windows of revenue and windows of opportunity. And I can tell you from a verifiable fact that opportunities abound, even for states right now, in this age and time, for them to pick up revenue. So collecting tenement rates, which goes to local government, and charging hotels. Some states are not even doing that, as well as advertising in partnership with local government. You know, states have not really been able to come up with strategy of revenue collection. Lagos State that collected what is accrued to, or what the entire 19 states of the north would have generated. What Lagos State generated is well looked at, might even surpass that. Because the states have to use their brain at a point in time, not even now, when revenue seizure happened to Lagos State. And you could see Rivers State have also tried in generating revenue. But for most of the states, I can tell you, they need to go beyond the usual. What I know, which I can also confidently say, is that revenue is available for states, but they have not identified, or they don't know the method, or there are a lot of leakages that is making this revenue to be scarce at the state level this moment today.
Okay, yes, talking about the opportunities, and you mentioned Lagos having like 19, equating 19 other states' revenue package. We have the likes of Yobe, Taraba, not just being there. Why are they not that viable? Is it the leakages you're talking about, or they don't just know how to go about it?
I tell you something. Reports by National Bureau of Statistics, the same organization shared that when Nigeria was struggling from COVID, some states, some sectors seems to have grown not just in single digits but double digits. When you look at what those sectors do, and the revenue they pay to both federal and state government, it was as they were fiscal review. When federal government has statutory function to collect revenue such as company income tax, permits and all other necessary charges that should have gone to state government, states do not even know. I can tell you there are states that have not collected revenue for 15 years. Since 1999, they don't even know the revenue that they are supposed to collect. And mine is not to now say which revenue is alive and where can they go. I think the states should do the right thing so that they can start picking up their revenue from this moment today.
Okay, just yesterday as well, the Joint Tax Board reported that 19 states are yet to automate their tax collections. What is the cost on the national economy?
The cost is very enormous. Number one, we might not even know what these states are collecting in terms of revenue. That gives room for a lot of corruption. Transparency is one of the reasons why Nigeria is rated low on it of doing business. So it is when you automate and you make use of technology, that is when transparency, which of course is automatic against, which is automatically against what we call corruption. So, but when those automation are not done, there is secrecy breeds corruption, and we will not be able to determine as to what they are generating. If a chief executive of state or a tax head, a tax controller today, since he's benefiting from it, when he leaves office, it becomes a big issue for people that are coming in subsequent days or subsequent years. So our advice has remained that let us automate the process so that there is transparency, so that people can have direct access, and there will be no issue of bias or favoritism, as the case may be.
Okay, the automation challenge is there, but do you also think that we have a remittance problem by the public, or is it the collection that is a problem?
Okay, so naturally, tax is a body, and people we want to do either avoidance or evasion of tax. While evading tax is illegal and it's an offense, avoiding tax is safe. So, but you know, people will say if I can avoid, why can't I evade? Which is very criminal, which is illegal, which nobody should do. You know, but when you automate and you have captured necessary data, remittance even becomes easier for authorities to make, for the public to do. But when there are no process, you see somebody walk into a shop or a store and say, can you pay your tax? And there is no, it's not going through account, it's not going through a bank account, no generation, no remittance in some cases that are supposed to be generated, they are not being generated. There is no way people will have confidence in such process.
Okay, like you've mentioned, transparency and accountability are vital for public trust. What are the deliberate steps to be taken to curb leakages and promote voluntary remittances by the taxpaying public?
Number one, I think all states should publish the process of collection of tax. Two, for in cases where they want to interact with small businesses or communities or areas where there is not so much advancement, they should rather use POS systems. Two, they should encourage that payments should be made through bank accounts so that people can have confidence. Receipts should be issued for those who have made payments on time. Three, I also think different state governments should look beyond a regular path of pay as you earn and so on and so forth. I will say this to you. States are not collecting enough in terms of withholding tax. I've engaged with two states directly that one was not shocked, the other one was a bit taken aback. And when they said, when I looked at what came in for them withholding tax, and I said, let us investigate all 5 farms that are operating within your state, all 6 deposits withholding tax is supposed to go to your state, and withholding tax or whatsoever within that are supposed to go to state covers. The state was able to realize about 1,500% of what they were generating before. 1,500%. So if only states have the will, number one is knowledge. Number two is the will to pursue. Number three is so the chief executive or the head of government not to be corrupt. In a case where they are supposed to pick up a bill of 500 million for the entire state and go to the account, but when 100 million is paid as corruption, people may come back to only remit 50 million. You think you have benefited today, but you have cheated the future of your children. and even the entire state, and your conscience, ability to sleep at night, will not be there again. Because to you think you are benefited, but entirely you have suffered people within your state, and infrastructure that are due to them are not there. There are quite a number of things states can do. There are quite a number of things strategies states can deploy, but I've just mentioned it so that maybe somebody within the state is listening. They can ask questions from bank headquarters within their state and ask with withholding tax are properly regulated, and they will stop disturbing Abuja or questioning whether revenue coming from Abuja is not.
Okay, talking about disturbing Abuja, Mr. Paul, talking about disturbing Abuja with what COVID-19 has brought to play, will the monthly coming to Abuja, is it sustainable?
Of course, it's not sustainable. And I will tell you, federal government even knows right now that it's no longer sustainable. When you look at the pattern of revenue generation, what crude oil price is saying today, we are now over $60 per barrel. It looks higher than what we had last year. But I tell you, before Nigeria can have sustainable stability, we need to produce above 1,500 million of oil per day, and the price should be above $80 a day. But if you are unable to do both, I can tell you that it's not sustainable. I can see it's not sustainable. So the Abuja should also look for a way of encouraging development so that more revenue will come as in form of company contracts. Now Nigeria has signed to African Continental Free Trade Area Agreement, which technically means that even remittance coming from customs may reduce. How significant that be? It is left for us to measure when the policy starts having impact on our books as we have it today.
Thank you so very much, Mr. Paul Alaje of SPM Professionals, for giving us insight on the ways to ramp up revenue and block leakages.
Thank you so very much for having me, and God bless you.
God bless you too. Well, moving on, time now to take a look at how the Naira is faring against other currencies. The Central Bank of Nigeria is making a move towards restricting provision of forex for wheat importation. The Apex Bank, under its Anchor Borrowers Program, is set to provide financial support towards boosting wheat farming in 16 producing states. The target is for Nigeria to attain 60% sufficiency of the grains in the next 3 years. The country is spending 6.1 billion naira annually on wheat importation.
Production and productivity will automatically increase to meet the local demand. Farmers will be incentivized to produce more as there will be improved quality seed, access to market, and better prices for their produce. With this policy, the government gets closer to achieving its goals in food sufficiency.
In the meantime, Wheat Farmers Association of Nigeria has commended the Central Bank of Nigeria, saying it would allow local farmers to increase production. National President Salim Mohammed said Nigeria consumes 5 million metric tons of wheat per annum.
So we appreciate and hail the dynamic leadership and boldness of President Muhammad Buhari and the able CBN Governor, Chief Emefiele. They have taken a giant stride to revive and provide more jobs for Nigerians. We have the capacity to produce and feed ourselves, especially if a roadmap towards self-sufficiency is adopted.
The current local production is put at 420,000 tons, while 5.2 million is imported yearly. Corn prices to remain elevated on strong global demand. Meanwhile, both the wholesale commodity index and retail prices have surged, especially for commodities such as rice, peppers, and oranges, among others. Here is a graphic presentation of prices of commodities on the global market. And at the close of transactions at the capital market today, the NSE All-Share Index appreciated by 0.40%, which is higher than the 0.1 marginal increase that was experienced yesterday, and closing the All-Share Index at 39,300.24 basis points. Details will come in our subsequent bulletins. Well, U.S. President Joe Biden will roll out a plan to raise taxes on the wealthiest Americans, including the largest ever increase in levies on investment gains to fund about $1 trillion in child care, universal pre-kindergarten education, and paid leave for workers. Sources familiar with the proposal said the plan is part of the White House push for a sweeping overhaul of the U.S. tax system to make rich people and big companies pay more and help foot the bill for Biden's ambitious economic agenda. The proposal calls for increasing top marginal income tax rate to 39.6% from 37%. It would also nearly double taxes on capital gains to 39.6% for people earning more than $1 million. Well, foreign investors are leaving India in response to a spike in COVID-19 cases. Nneka Oko has an overview of market performance across the globe.
Stocks in Asia were mixed on Friday, with the price of Bitcoin tumbling below $49,000. The Nikkei 225 in Japan fell 0.57% to close at 29,020.63. Mainland Chinese stocks nudged higher on the day, with the Shanghai Composite rising 0.26% to 3,474.17, while Hong Kong's Hang Seng Index advanced 0.85% as of its final hour of trading. European markets were little changed on Friday, with investors monitoring a slew of economic data and corporate earnings. London FTSE hovered 0.5% below the flat line, with CAC 40 of France shedding 0.5%, while Germany DAX dropped 0.28%. U.S. stock indices were higher early trade Friday as investors prepared to end a down week for equities amid concerns the White House could seek a hike to the capital gains tax. The Dow Jones Industrial Average had dropped more than 300 points by the end of regular trading Thursday. The S&P 500 erased earlier gains and closed 0.9% lower, while the Nasdaq Composite slid 0.9%. It was another big day for earnings in Africa, with most stocks reporting gains on Friday. Tunisia Tunidex climbed fractionally to close at 7,058.75. Namibia Overall Index rose 0.11%, while South Africa's JSE Africa Top 40 jumped 0.09% at 61,236.61. That's Global Markets. I'm Nneka Oko.
That wraps this edition of Business Express. Remember to keep in touch with us by sending in your comments, observations, and suggestions. Also be informed that all previous episodes are available on YouTube on NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now. The hashtag is BizX. Business Express returns Monday at 3 p.m. Be safe out there.